Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's update our view on euro currency. So despite the broadcast this week was busy with mostly Iran-Israel conflict, it doesn't mean that important data, some statistics have not been released. So actually we've got some interesting numbers. I will have made some analysis as usual, and well, it seems that indeed Fed intends to sit in the hands through the summer by the many reasons. So first of all, this is the drop in activity on the markets and in general in business area because everybody trying to get to vacation. Second, the major decisions will happen somewhere in the middle of the summer. So we know about the tariff negotiations that could start only after 9th of the July. The Japan and European Union negotiations, they probably will last for a few weeks. So it means that they could even move into August. So the debt sale bill also will be considered somewhere in the middle of the summer, also in July, probably the same as a very beautiful bill. It also will be considered in July. So all the first results of all these bills and negotiations will come as early as August, but more probably in September. So for the Fed, it means that it could easily sit in hands until the next meeting in October. Maybe some hints will be given as usual in the Jackson Hole. So in the end of August on the central bank meetings. But overall, and actually this corresponds to a fundamental view that we have. So actually, based on the recent data that we've got and we considered this week, we come to conclusion that yes, situation is deteriorating gradually across the board, and all indicators that you can see that markets gradually, the United States gradually is turning to recession, and most probable that recession will take the shape the way of the stagflation. But deterioration of the indicators is not really very fast. So it's obviously could last for at least 2-3 months. Or yes, by the way, I have got an important thing that United States Treasury also will come with the big borrowings in the middle of the summer. So this also will be a very important event when you could see the demand for United States debt. It also will bring a lot of information. So all this stuff tells that how it actually tells that Fed easily could wait. How it could impact on the performance. So in general, the big balance between euro and United States dollar hardly will change due to these events, at least those that we could consider and that we could analyze. And it means that euro probably will keep this upside tendency, but we can't count on really explosive action. So most probably it will be a really slow and gradual drift to the upsides. 116, 116.50, 117. So that probably will be the major aiming tendency on euro currency. There are two major risks that I see. The first is for euro currency is the stop of the supply of the crude oil from the Middle East. That really could drastically change the situation. Well, for the United States, it's probably the big deteriorating in the data, or if some big problems will come on the surface in some bank crisis or something, because it is easy to imagine currently the big collapse in the United States based on the conditions in the economy, while it's very difficult to imagine some miracle rescue. So that's two factors that unfortunately out of our control, because we do not know how the conflict will develop in the Middle East, where the United States will step in or not step in, what surprises Iran has. So, but overall conclusion is that actually it really will depend on this on availability of the Middle East crude oil for European Union. So that's the big risk factor. Speaking about the nearest week, what we could say, based on the daily chart, you could see the situation barely has changed compared to Friday. Here we have indirect bullish signs, which is actually standing near the top. So despite the pullback has happened, market still remains very clear to the top. This is bullish sign. Second, despite that the normal trend has turned bearish, we still have this upside tendency. It is not broken, so we have high lows and high highs. On the common week, the 114, 113.50 area seems as a floor. It's a support area because it's accompanied with the daily oversold, and hardly market will break it just in a single way. So it's just when there's some straightforward action. So that probably we could treat as a flow for a common week. And here I'm mostly concerned with the things, how we treat this pullback. So speaking definitely on the fall time chart, I'm wondering whether we really are getting this triangle, because it could resolve lots of problems. So getting a triangle around the previous top, it's always the bullish sign. So if we are really getting it, it means that inside of the triangle, we could consider taking the long position. And as closer we'll take it right to the bottom of the triangle, it's all the better. Besides, the attractiveness of the current situation, that actually this setup and the point where we think about taking a long position stands very close to floor of the week. So this is daily confluence and daily oversold area. So this is good level to hiding the stop below it, if you plan to take the long position. And performance inside of the triangle tells that probably we really could get the bullish signal in the beginning of the week, because the head and shoulders pattern that we mentioned on Friday is really starts working, starts forming at least. So we have left shoulder and head. Now the shape, some kind of the shape of the right shoulder. But there are a few comments on the right shoulder. Let's take a look that we're actually expecting the 127 head and shoulders, so shoulder should be lower. And appearing on the grabber on top here, it also exists on the futures, by the way. It suggests that market should take it out of these lows. It means that this point, with the, well, high chances that maybe not yet the bottom of the right arm, it means that market still could show a bit deeper action. And based on this combination and harmony, with this shoulder, it seems that 114.80 on average in the point where that we should keep an eye on for potential long entry. So what the results might be, if hand shoulder starts working as it should, we could get at least kind of the ABCD that leads us to the 1550 area, and market could come close to the border. Here is the flag border, channel border, but on the daily chart you could see that, on the fall time frame chart you could see it's also triangle border, and that might be stands at the eve of the possible breakout, depending on what we'll see on the background, some maybe statistics and something like this. If hand shoulders fails, which means that market will start dropping below the 114.70, 75 area, with the high chances we're going directly to the XOP, which is perfectly agrees with the daily floor. So it means that the next area where we'll be watching for possible potential bullish patterns, this time will be around the 113, 113.50, in general in the confluence, 12.18, 13.43. So the high chances that this will be next level where we'll start watching for any bullish signs. And so that's actually what we have. That being said, our plan suggests watching for hand and shoulders, making decision on the potential entry around 1480, and then the way how market will perform with these hand and shoulders tells us whether it will get upward continuation or we should be ready for the further drop, first to the XOP and in general back to the confluence support on the daily chart.